In early 2025, the Trump administration shocked the global auto industry by imposing sweeping tariffs on auto imports, hitting Japanese vehicles with a combined 49% rate. This move threatens to make Japanese cars unaffordable for Americans and forces Japanese automakers to reconsider their future in the U.S. market. For decades, brands like Toyota and Honda have been deeply woven into the American economy with massive investments and local jobs. Now, these tariffs disrupt that partnership, creating unprecedented uncertainty for both sides. The financial pressure is immense, nearly a 50% tax on every Japanese vehicle and part entering the U.S. The industry faces a critical question: can Japanese automakers survive in America under these conditions, or is a major exit on the horizon? The decisions made now will reshape the American auto market for years to come. Japanese automakers aren't just importers. Over the past 4 decades, they've become deeply woven into the fabric of American industry and communities. Today, they stand as pillars of American manufacturing, providing stable jobs and investing in local economies across the country. Over 40 years, Japanese automakers have invested an astonishing $61.6 billion in U.S. factories, research and development centers, and corporate headquarters, especially in the Midwest and South, where their presence has revitalized entire regions. Their U.S. plants now produce 3.2 million vehicles every year, directly employing 110,000 Americans on factory floors and supporting an additional 2.2 million jobs through a vast network of suppliers, dealerships, and service centers. Despite this massive local footprint, Japan still exports 1.37 million vehicles to the U.S. annually, making up about 30% of its global auto exports and ensuring a steady flow of new models and innovations to American consumers. But the new tariffs threaten both imported cars and U.S.-built Japanese vehicles, since many essential components like transmissions and electronics are still sourced from Japan and shipped across the Pacific. This dual strategy, combining local production with continued imports, has made Japanese brands a staple in American driveways, but now leaves them uniquely exposed to trade tensions and policy shifts. Even Japanese cars assembled in the U.S. will see price hikes, as imported components are hit by tariffs, raising costs for manufacturers and consumers alike. The result is a crisis that strikes at the very heart of their American operations, creating uncertainty for workers, suppliers, and entire communities that depend on these jobs. The future of millions of American jobs and the stability of countless families now hangs in the balance as the industry faces its toughest challenge in decades. The economic fallout is immediate and severe. The shockwaves from the new tariffs ripple through the financial markets, sending stocks tumbling and shaking investor confidence. Businesses brace for impact, uncertain about how deep the damage will go. New car prices are expected to jump by $2,700 to $10,000, even for U.S.-built vehicles, as parts costs soar. For many families, the dream of owning a new car suddenly slips out of reach, and dealerships brace for a sharp drop in sales. Mazda, with most of its U.S. sales relying on imports, faces an existential threat. The company's future in the American market is now uncertain, and its workers and dealers are left in limbo. Even Toyota and Honda are hit hard by higher parts costs. These industry giants, known for their efficiency, now scramble to adapt as their supply chains are disrupted and their profit margins shrink. The U.S. auto industry could lose $108 billion, threatening profits, investment, and future growth. Automakers are forced to reconsider expansion plans, and some may even halt production lines. Over 2 million American jobs are at risk if sales plummet and production slows. From factory workers to sales staff, livelihoods hang in the balance as uncertainty grows. The supply chain is deeply global. 60% of U.S. assembled car parts are imported, so American suppliers will also feel the pain. Disruptions ripple outward, affecting shipping, logistics, and even small local businesses. In Japan, the auto sector is a cornerstone of the economy, and a U.S. sales collapse would ripple through factories and suppliers. Thousands of jobs and entire communities depend on exports to America. Prime Minister Ishiba warns the tariffs could unravel decades of cooperation and destabilize global trade. The political fallout is just beginning as leaders scramble to find solutions. Both countries face a lose-lose scenario, with businesses and workers on both sides suffering. The economic pain is not limited to big corporations. It reaches deep into local communities. The integrated US-Japan auto partnership is now under threat like never before. What was once a symbol of global cooperation now stands at a crossroads, with the future hanging in the balance. This isn't the first US-Japan auto clash. In the 1980s, rising Japanese imports pressured Detroit, leading to voluntary export restraints instead of outright tariffs. Japanese automakers responded by building factories in America, launching decades of investment and job creation. Some argue today's tariffs could repeat that success, but the world has changed. The global auto industry is now far more complex, and applying 1980s logic to 2025's realities is risky. The 2025 crisis is fundamentally different from the 1980s. Japanese automakers already produce over 3 million vehicles a year in the US. There's little left to reshore. The line between foreign and American cars is blurred. A Camry built in Kentucky is as American as a Mustang. Today's supply chains are global and intricate. Parts cross borders multiple times, making tariffs disruptive for all automakers. The US is no longer the only major market. China's rise gives automakers alternatives, reducing American leverage. Automation has transformed manufacturing. New jobs from reshoring are limited, as modern plants need fewer workers. The US has lost 300,000 auto jobs in 25 years, mostly due to automation, not trade. Tariffs now target a globalized, automated industry that's nothing like the 1980s. The promise of a jobs boom is an illusion. The real risk, making the US less competitive in a rapidly changing world. The US tariffs have triggered global alarm. The EU, exporting $43 billion in vehicles to America, is preparing retaliatory measures, risking a transatlantic trade war. Mexico, the top US auto parts supplier, faces major disruption, with production lines and jobs at risk despite USMCA protections. Canada, sending 85% of its auto output to the US, vows countermeasures to defend its industry. The North American auto bloc, once seamless, is now under threat. South Korea, home to Hyundai and Kia, faces steep tariffs even as it invests billions in new US plants. Foreign automakers continue to invest in America, but policy instability clouds the future. Around the world, nations are bracing for a new era of trade disruption. Many experts warn the tariffs could backfire, hurting US innovation and competitiveness. Shielding domestic automakers from global rivals reduces the pressure to improve quality and technology, especially dangerous as the industry shifts to electric and autonomous vehicles. Unlike the 1980s, there's no national push to innovate alongside protectionist measures. Critics say the US could fall behind, as China and others invest heavily in the future of mobility. The hope for a manufacturing jobs boom is unrealistic. Modern plants are automated and need fewer workers. Even if some production returns, job gains will be modest and offset by losses in dealerships, logistics, and suppliers. Tariffs raise costs for all automakers, blurring the line between foreign and domestic. The real danger, making the entire US auto industry less competitive on the world stage. Japanese automakers face tough choices. A full exit from the US is unlikely, but they'll accelerate localizing supply chains and push suppliers to build in America. More models may shift to US plants, but this is costly and slow. Companies might drop low-margin imports and focus on higher-end vehicles, absorbing some tariff costs to stay competitive. If the US market becomes too volatile, future investments could shift to Asia, especially China. This wouldn't be a sudden exit but a gradual pivot. New tech and capital would flow elsewhere. The biggest risk, the US loses its place as a priority market for the world's top automakers. The long-term threat is a slow, managed decline of Japanese presence in America. If Japanese automakers pull back, the US market will change forever. The landscape of the automotive industry in America will be dramatically altered, leading to a ripple effect that touches every corner of the market. Competitors like European brands and South Korea's Hyundai and Kia would try to fill the gap, but higher costs mean fewer choices and higher prices for consumers. This shift could lead to a less competitive market, where the variety of options that consumers currently enjoy might dwindle. Chinese automakers, already strong in electric vehicles, could expand globally as US and Japanese firms are distracted by trade battles. This could accelerate China's dominance in the EV market, making it a formidable player on the global stage. The US risks losing high-quality jobs, foreign investment, and its reputation as a stable business environment. Factories could close, and communities that rely on these jobs could face economic hardship. Isolation could leave America behind in the race for automotive innovation. As other countries push forward with new technologies, the US might find itself lagging, unable to keep up with the rapid pace of change. The vibrant, competitive market that benefited consumers could give way to stagnation and higher prices. Shoppers might find themselves with fewer choices and higher costs, making it harder to find the right vehicle at the right price. The outcome depends on political and economic decisions in the coming months. Lawmakers and industry leaders will need to navigate these challenges carefully to avoid long-term damage. Japan may adapt, or US policy could shift, but trust and stability have already been damaged. The long-standing partnership between these two nations is at a crossroads. The world is watching to see if the US-Japan partnership can survive. The decisions made now will have far-reaching implications for global trade and economic stability. The stakes for the global auto industry and millions of workers couldn't be higher. The future of the automotive world hangs in the balance, and the actions taken today will shape the industry for years to come.